Hi, everyone. So first of all, thank you all so much for joining us at the Innovate Finance Global Summit. And also, thank you very much for getting up so early to join us on day 2, as I know most of you have had a pretty long evening and fun evening last night. So I am really excited because I have a panel of 4 fantastic innovators here with me today who are representing both the new disruptive and the new incumbent face of banking. So before we kick off, I'd love for each of you just to very briefly introduce yourself. So Jaydev, I'll start with you.
Hi, good morning. I'm Jaydev, CEO at Zopa. Zopa was the first peer-to-peer lender. Last year, we lent out £1 billion to creditworthy UK consumers, and we expect to launch a bank later this year, widening out our range of services.
Hi, I'm Shachar, founder, CEO of Curve. We launched the beta last February with over 500,000 customers, onboarding them on the first ever over-the-top banking platform. We're launching in over 31 countries this fall. That's about Curve.
Morning, I'm Arithra. I'm the founder and CEO of Dozens. We launched in January with a spender to saver to investor proposition. I'm sure we'll talk more about it in the panel.
Good morning, everyone. I'm Ben Davey. I think I represent the incumbent on the panel. So I'm the CEO of Barclays UK Ventures. We are about a year old now. We're a business unit at Barclays set up to grow Barclays, particularly the revenue line, through the identification, incubation, and scaling up of transformational new business lines and business models.
Great. So as Chris mentioned, this panel is really about challenging the challengers and also what are we seeing for the future of banking. So just to put this into context, last year, challenger banks took the lion's share of VC investment in UK fintech in 2018 at 27% of the total. We've heard some great news. So for example, Oak North became a double unicorn in September, topping a $2 billion valuation. In December, Monzo opened up its crowdfunding round. It raised its targeted $20 million in less than 2 days. Starling Bank had a $98 million funding round earlier this year. As many as 60 banks a month are disappearing on the UK high street, with nearly 3,000 vanishing over the past 3 years. So we're clearly seeing a real shift within this space. Market share for current accounts of the big 4 banks is shrinking rapidly from 92% of all bank customers a decade ago to 70% today. However, according to the FT, market share of the big 6 banks has actually increased from 80% of UK current accounts in 2000 to 87% in 2017. So clearly a dynamic shift happening. We're seeing a change in the space. And I want to ask each of you, and Jaydev, I would like to start with you because you have a really interesting story being one of the most popular, most well-known peer-to-peer lenders, and you've decided to move into banking. So can you explain what was the rationale for that decision? And more importantly, is there something that you feel the challengers and the incumbents are not currently providing in the banking space that you can?
Absolutely. So if you look at our evolution, we started as a peer-to-peer lender and lending to creditworthy UK consumers, have done about £4 billion of that lending. When we talk to our customers, they are incredibly satisfied with us. More than 85% of them would recommend us to a friend or family, compared to the same stat where, when you ask the average UK adult on the street, more than 60% do not trust their financial service provider. So there is clearly a huge opportunity. And the biggest opportunity we see is not in current accounts. So as soon as people start talking about banking, for some reason, we all gravitate towards current account. It's actually, for me, a less interesting part of the market, because at the end of the day, I see current account purely as a utility. Where we see a bigger opportunity is that if today a customer wants to take a personal loan, wants to take a loan to finance their car or borrow on a credit card, their options go back to the incumbents. And the incumbents, while have innovated a little bit on the user experience, the fundamental business model is still, I would say, anti-consumer. It looks to make money out of inertia. It punishes loyalty. It attracts customers through very long introductory offers that if they stay loyal with the institution, ends up kind of doing badly for the customer. And that's where we see the biggest opportunity, is not just in the user experience. Of course, that needs to be important. But what needs to really change is how we do lending in the UK market, and how do we make that in a way where we win, where the customers win. And that's where we see the biggest opportunity, and that's what we're going after. Current accounts, is one place where other stats include that more and more people are do not have the idea of a main current account. They kind of think about it as, I have a few current accounts, I use the current account that I need to best serve my purposes. So I might have a current account to do my foreign spend, I might have a different current account to do my budgetary spend, and I have a different current account where I actually get my salary. So interesting space, but I don't think that's where the bigger opportunity is.
Great. Thanks. And AC, I would like to move to you because you're also challenging the challengers, so to speak, right now, and you have a really interesting business model. So can you tell us a little bit about that and also how you plan to be profitable as well?
Yeah, maybe I need to tell you a little bit about why, in our opinion, the challenge wasn't enough, which is why we thought we need to exist, right? So my perspective is probably going to be different in that it's more of a banking perspective. So the first question that comes to mind is, are banks a platform? Or are they something more? So if they are a platform where people with surplus money meet people who need money, then the fact that banks get to keep almost 90% of the revenue that comes from the people who need money, which is the lending bits, isn't that platform rent too high? So then you have to question yourself to say, it's not a platform because it's got the regs and you've got to keep your money safe. And you quickly come on to say, what is the point of the bank? Should it be your financial advisor in your pocket? And our view is yes. I mean, if with all that data and all those transactions, you couldn't simply be a platform. There needs to be more equitability in the platform pricing, but we have a higher responsibility. And the anecdote of McDonald's with the milkshake, the jobs to be done. So McDonald's realized very quickly, that they had to change the milkshake consistency and the size of the cup so it fit the cars because people were buying milkshakes to go on long drives in the US. And they could do it because they manufactured the milkshake and the container. So we don't think being a platform as a digital player is enough because once we find out the job to be done, if we don't manufacture the financial products, how would we change it? And then the final bit is financial education. Even if we changed it, would you actually buy it? And that's where the spender, saver, investor journey comes in because even if you're financially engaged, if you need 7 different apps to keep on top of your money, that's a really hard call. So we thought we needed to come to market, building our own financial stuff, with an aggregated offering.
Great.
Do you want me to comment on the profitability or leave it there? So it's quite simple, really. Like in every part of that journey, we make money. So we make money on interchange, we make money on custody, we make money on FX, for example, when you do international remittances. And it's actually that aggregated offering that lets us not make money on overdrafts, for example, which then lets me look you in the eye and say our incentives are aligned. So if we didn't do the aggregation, we couldn't, and then we would probably struggle with monetization just like some of our peers have done in the past.
Great. Excellent. So Ben, now as the token incumbent on our panel here, I'm going to give you a chance to respond because we've heard from Jada, we've heard from AC about the different business models. What, from your perspective, do you think about both the older generation of challengers and the new generation coming up?
Yeah, look, it's very interesting. So first of all, how is it that sort of an opportunity has presented itself for challengers? And I think it is entirely fair to say that the incumbent banks, by and large, were relatively complacent and didn't follow through strongly enough on the jobs to be done, the problems to be solved. So when you then look at the opportunities for an incumbent bank, it is to effectively, I think, address 3 issues. One, the culture of the organization, effectively encouraging people to operate and work as if they were a startup. The second aspect is really that ways of working across the whole firm. For sure, the challengers have all sorts of advantages and great teams and using most current technology. The incumbents also have some helpful strategic tools, obviously scale, resilience, security, a number of very good internal technology people. And so when you take that and then you look at the opportunity set, for me at least, and certainly part of our business model, it's to be much less proprietary about what we do at Barclays, much more open to genuine co-development both within industry and outside of industry, and indeed be much more comfortable and be set up to work outside of Barclays with the challengers, both old and new, to develop products and services together where there's strategic alignment. And so whilst I have huge respect for the work that's being done by certainly the panel and a whole host of the fintech community, the opportunities, I think, for the big banks to work in partnership are even more exciting.
Okay, great. And Shakar, you, quite well known, have chosen not to take out a banking license. Can you tell us from your perspective, we had an interesting conversation backstage about consumer adoption and some of those challenges and some of the opportunities there as well. Can you talk a bit about your journey around consumer adoption and also what you just see as a whole for the future of banking?
Yeah. So Curve has a very different view from many players in the market. There's a lot of opportunities from unbundling any previously published product by the bank, from remittance, lending, investments, and those are good businesses, don't get me wrong by any means, and this is the experience of unbundling of the bank that we all see right now. Over 30,000 fintechs globally are biting different businesses and different audiences from the likes of Chase, BNP, and Barclays. And we believe that, yes, there's a room for those players, there's a room to disrupt business models or disrupt experiences, but the inevitable and the great opportunity is actually to take all those offerings and all those financial products we use, and just now on the panel, we mentioned 5, 6 apps, 7 different cards, 3 different bank accounts, and it will continue to accelerate because we all have different use cases of money. We're all using different products online, different products if I'm an expat, different banks for different purposes, if it's business, joint account. And our goal is not to come and we don't believe that the end game would be a company that comes and competes with Chase or competes with Barclays just because we think Barclays and Chase are doing a great job keeping our money safe and that's their expertise. We also think Barclays and Chase are very good at lending. Yes, maybe their interests not aligned, but someone else can align those interests. And this is where we believe that the rebundling of the bank will be the end game. And we're not the only one who believes the end game will be rebundling of the bank. It's just that most of the challengers think that in order to do that, they have to tell you, leave your bank, whatever your salary is deposited right now, bring it to me, and I will bring you a great experience. And this is, in our belief, a game that they will lose because, with all due respect, it may take Barclays 4 or 5 years to move the oil tanker, but they will move the oil tanker and crush everyone on the way. And if the bank is looking to have 5, 6, 10 million customers, well done, but it's not the opportunity. The opportunity is as big as it was for Amazon for commerce and as it was for Spotify for music. It is an over-the-top experience there that connects you to wherever your money sits. If your money sits in Japan and you now live in the UK and you want to access a Japanese bank through JCB network, if your money sits at PayPal or Alipay or my Israeli bank or my American banks, we connect everything to one experience there. Great. And once you connect everything to one experience there, that company has remarkable access to data, not only just how you spend your money and where your money sits, but more than that, it has access to your financial passport. That means that that company can onboard you on any financial product, Dozens, Zopa, with one tap. No KYC to provide, no application to fill. We already know what's the best product for you, and we're here to recommend you, generate insights, tell you what you want to do. If you say A or B, we then execute that for you.
Great.
And that's kind of how we see it.
I want to pick up on that point because you made a really interesting comment about the end game. And I'm curious, JDev and AC, to hear from you. Is it about challenging the incumbents or challenging the challengers, or is there something a bit greater here? It's about changing financial services as a whole. AC?
You almost read my mind. So, I actually don't disagree. It almost feels like in the absence of something fundamental changing, something like Curve is the solution. No question. So in the short run, no question. I think you're quite right that, having spent the better part of 13 years in banking, I don't think it's the technology. I think those things will change. And that's why I also don't like platforms as a business case, because sooner or later the manufacturers will get their distribution right. It's not that hard to make an app anymore, right?
I don't agree with this.
Just complete the point.
Yeah.
You're going to
then you can pitch in.
You're going to agree with the bit that, I agree that HSBC, Barclays are very good brands to keep your money safe. I think the bigger problem is aligning incentives internally as well. And I don't mean with the customers, right? Even if you get the tech, the way these organizations are siloed, to get people to go across product silos and make a financial product that's different, that says, let's stop charging for overdrafts because, you know what, if people save, our business will actually do better. That takes such a long duration that you're not incentivized as a rational, smart banker to do that. And I know that from experience. Yeah. So I think that's the bigger challenge. And if you see that as a challenge, you wouldn't be happy with Curve as the solution because it's kind of saying, put a stitching plaster on it, right? Whereas we might not get successful in the next 5 years, but if we do, it's probably like a 20, 25-year plan to actually make stuff better.
Okay.
I think what fundamentally has to, since you're,
Yep, go. Jacob, go ahead, and then Ben. Yes.
Yeah. I think going back to the idea of what does fundamentally have to change, I think what does fundamentally have to change is that, like most consumer industries, banking has to fundamentally change to start with the customer in mind, right? For too long, banking has started with regulation for the good banks, and for the bad banks, it's really about profits. And in most other industries, people look to make money by saying, how do I produce a product that my customer will love? And because the customer loves my product, they will come back to me again and again and again, right? Versus banking says, how do I lull my customer into a false sense of security and worsen their terms over life when they're not looking and really take advantage of that inertia. Till we don't change that business model, and product after product in consumer finance or consumer banking is all oriented around that, right? Current accounts where you get great interest rates to start with, or on a limited bit. Credit cards where you get a long 0% teaser. Mortgages where you have kind of a tracker rate mortgage that kind of increases after 2 to 3 years. The entire model is based on how do I trap you into something that you should not be paying for. Till that doesn't change, nothing's going to change. And for that to change, it'll take a very, very, very brave public banking CEO to say, I'm going to take a huge hack at hundreds of millions, in case billions of pounds of profit to actually make that change. And that change cannot come from the incumbents. The oil tanker is not going to shift, and it has to come from the challenges, and the challenges have to almost force it on the industry to make that happen. And that's why I think there'll be continued space for making that things. And I don't care if Curve wins in terms of creating a bunch of great platforms. Wonderful, because you know what happens? When I look at customers, they look outside and say they find the best product for them, then people like us win. Right? When people go to price comparison sites today, we are the single largest lender. Bar anyone, Barclays, we beat every single bank when people go to a price comparison site and look for what the best deal is. And we don't do that by bleeding on price and kind of giving it out cheap. We do that by providing speed, certainty, and great terms right there, right? And the more people like Curve can succeed, the great for what he called manufacturers like us can win, because we do want customers to look out there and see what is better for them. And that's what this industry has to change towards.
Ben, now.
Yes. Right. So look, first, thank you everyone for getting up early. So I'm going to disagree with all three of them. And I know you're going to sit there saying, hold on a second, incumbent bank representative. I think they are all out of date. Genuinely miles behind what is happening. So let's just reflect, okay? For 2 years, I was group head of strategy, and Barclays said, we have a strategy across the entire organization, we're going that direction. Ben and team, can you now go and create the hedge strategy? What if that's not right? How about going and becoming the disruptor within Barclays? Point one. So our role is, contrary to what's just been discussed, to think intelligently about how we can disrupt ourselves. And that's the mandate that Ventures has within Barclays. I personally think that's a pretty progressive step, and the mandate came from Jess. I used to report into the group head of Ops and Tech and Finance. I sat on those excos, and so that is the mandate. Second point, silos. By definition, our team can go across the entirety of Barclays. We have multiple examples, I can't call them out by name, where we have just picked up the phone to the head of the functions or the business units and said, this needs to happen. If you want any references, please do go and speak to some of our accelerator cohorts who have seen that in action. Thirdly, speed to market. Really out of date, okay? So for those who have been following, and I'm now going to talk about the core business, let alone what we're doing. So Barclays mobile banking app, if you're tracking it, very good banking app. I'm not here to advertise that particularly. However, releases, okay? We've gone from 1 a month to 2 a month to 4 a month, okay? And it's going to get quicker. I can't tell you exactly what it is, but we have just taken a concept, built it, our own technology, and released it in less than 2 months. I took a different type of application based around strategic aggregation, 7 people, 2 months, done. So anyone out there thinking that the big banks are complacent and not responding to that, I think there's a sea change going on across the organization. I love it because our inspiration are these types of people that don't think we can't change because we are.
May I?
Yes.
Great. So I like the fact that we all agree on the inevitable, which is kind of this banking platform in the cloud. Now, the reason I think incumbents will not be that platform are three. In the entire history of time, which is basically the past 40 years, once technology started to disrupt the markets, the old bundles, the banks, the Walmarts, the newspapers, did not become the new bundles. And the reason not become the new bundles are key two reasons, if we want to summarize a bit. A, it's an accounting problem, and B, it's a DNA problem. Accounting problem, you mentioned it, I used the wrong word, I think, silos. If I now come to the CEO of Barclays or the CFO and tell him, hey mate, I have a great idea, let's do Revolut 5 years ago, and let's disrupt the FX market. The CFO, who has his chair and career for the next 5 years vision, not 15 years vision, will tell you, what are you talking about? Disrupting our own business model? But we have 90% we're making money from those customers. So maybe someone can eat my breakfast, TransferWise, Revolut. I will not do this change. And if you're not willing to disrupt your own business models, and the reason you're not willing to do it is because of RONA and IRR, internal rate of returns, accounting problems, you are unable to make this change. So you have a problematic accounting problem, and until the CFO will not be willing to disrupt long-term, short-term revenues and profits for long-term returns, 10, 15 years returns beyond his career, I don't think there's ability to change. But more importantly, people talk about culture and purpose and DNA. There's a word in Japanese just for that, ikigai, I hope I'm pronouncing it correctly. But the point is that you're playing a different ball game. You're playing basketball, and you're the best at it. We're playing baseball. It's going to be a different ball game. Different rules, different skill set, different way of looking at revenue and profits. Unless you're changing your DNA, firing your entire leadership team, and most of your team that below that, mostly operational, you will not be able to become a different company. There's only one company I know that has managed to do it. Well, there's not one, there's few, but it's usually in another market of rebundling, which is Netflix, who moved from home video into digital. Guess what they've done? Fired half the team. Literally, completely changed the company DNA and culture. And another one is Disney, which has grown huge, but they've done it and did the strategy that Barclays took, and BVA took, which is investing in startups, buying them in, and revamping the DNA of the company.
Okay, so I'm going to come back on one point, and then we must move on, I'm sure. But one point, so I don't disagree. You've got to change your DNA, you've got to change your approach. One data point. My chief products and technology officer, 8 years at Microsoft, 4 years at Google, 3 years at Disney, and took them online, then worked for Bill Gates directly, and then recently was working leading Amazon's advertising business. That's a DNA change.
If you retain the person, that's a DNA.
So
Getting them in is not the hard.
just one thing, we've heard a lot actually from all of you about putting the customer back at the center. What about the issue of trust as well? Because you're obviously one of the largest, the oldest banks here in the UK. You're all new. Where do you think that lies, and how important is that as you create your proposition going forward?
I think it's very important. I think that's probably the decider in terms of who wins eventually. And I think, for example, like I love the Barclays ad that advertises you can freeze your card. You have the budget to advertise freeze card. We can't even talk about it for the next 5 years because it's one of the tiny features that we built in the last 6 months. So obviously trust, when you have money at such a big disparity, is a big problem for us. But on our side would be the fact that we can tug at the heartstrings that I think the incumbents can no longer do. And we will have to live by it, and we'll have to perform on the promises we make over the period of time, because there's no, you know that from personal relationships, there's no substitute to time. Over time, we'll have to get that trust and earn it.
I think trust is an interesting point. Trust to do what, right? I trust my kids to do a lot of things, but I don't trust them to drive my car. So this is a trust. Using a word very simply doesn't, I mean, it kind of simplifies the equation, right? So I do think customers trust their banks, and they trust their banks mainly to keep their money safe. I don't know safe how, but safe. But if you ask them, and it's not me, the FCA came out with this report, so I'm not making this stuff up myself. If you ask them that do they trust their financial services to act, provider to act in their interest, 60% say no, right? So clearly there is a lack of trust when it comes to actually helping the customer be better. As compared to, again, if you look at the stats we have had, we've got 85% of our customers saying not only they trust us, they actually are very happy to recommend us to a friend or family member to actually use our products and build a relationship there. And trust comes from So that's trust about saying that, these products are good and we would actually recommend that to a friend or family. A very different kind of trust. And it's that trust that we need to go after, not the fact that we can trust to keep your money safe, because that's interesting, but doesn't get you to build kind of a strong relationship. If trust is about relationship, then you have to make sure that you set those relationships in the right terms. And the only trusting relationships that can last the long term and people come back to you again and again is if you set it up in a win-win way, when you decide that you create your business model in a way that actually aligns your interest with that other customer. And that's the trust we are after. I think that's the more compelling trust, and that's what we should be aiming to get to.
So let's pick up on this piece of relationships a bit, because Ben, I know that Barclays is working in partnership with a lot of some of the challengers and the new players. So I'd love to hear a bit more about that as well.
Yeah, look, I think, and it does come back to the DNA change. I know not necessarily convincing our panel, but we, interestingly, I don't know whether you would know this, I think I'm right in saying that we currently run the largest incubation network in the UK. So if you haven't heard of them, please do go and have a quick look at Eagle Labs. We have 21 locations across the UK, right across the UK, importantly, not just London-centric at all. We have within that environment just under 500 high-growth companies. That's all the way from one person and a laptop all the way up to sort of 20, 30 people companies. The heritage is very interesting. As part of our review of branches, we felt there was something that we could do with those branches that we were coming out of. We put some light computing in there, a little bit of support, and handed it back into the community. This was sort of 3-4 years ago. People got together, companies started to form, and as a result of that, the Eagle Labs network was born. Just to give you a sense of scale, because we are absolutely working hand in glove across the network, we have EdTech, Health Tech, FinTech, MarTech, you name it. Every single one of the sub-sectors is represented. And again, you may or may not know this. Last year, we ran for that community, and indeed, open door, 1,631 events, all focused on technology and innovation, attended by over 67,500 people. So probably don't know that about Barclays. That's now within Ventures. We have doubled nearly the size of that network in less than a year. We're opening roughly a lab a month right now. Next one's Leeds, 7th of May. Sheffield was last week. We are helping, we hope, companies grow. We provide the Barclays network, but we're also very grateful for the learning that we take back in response. So that's just one example of how we're working hand in glove with the community, and we hope that we can help those companies get off the first step of the ladder and move up.
Great. So we have the challengers who are challenging the challengers, and we have the incumbents. But what about the big techs? So the Amazons, the Googles, the Facebooks, the Apples that are more and more coming into this space. I'd love to hear some of your thoughts on that. Anyway.
So we've seen, I think the latest news is Apple coming out with the Apple Card, which is in European terms too little, too late, I guess. But we've been tracking the big GAFA for a long time now, and we believe Google by Q4 will also have a card with another financial institution. And Amazon is really investing there in most of resources in increasing the share of wallet at Amazon through the Amazon Pay and other collaborations they're doing with third-party schemes. There's no doubt that these companies are great at building user experiences, and they are very good in bringing current experiences and behaviors to the cloud or to the future, to what we see it with Google and Amazon, and of course Apple, which is top brand. So I believe that all four, and that includes Samsung there, will try in the next 5 years to become that operating system. And really the competition for the banks will not be Curve, who's working with the banks together. It will actually be the likes of Apple, who will come to the banks and tell them, if you want to participate in my network and provide any product you manufacture, from credit line to a new credit card, I want 30% of your profits, or you're out. And now with the new Apple Card that's been introduced, they're competing directly with Chase and Barclays on the share of wallet, which is strange, but they've done that.
So
Well, I have a different perspective there that, if you think of particularly Google and Amazon, I think they've done a fantastic job supporting a lot of the fintechs in terms of the great work they do in the back-end infrastructure that actually a lot of our platforms sit on. When I speak to people at Google, I think, particularly as well as on Amazon, there is a healthy respect for the complexity that regulation brings to the table. And given the regulatory issues that they're dealing with, I do not think they would want to add a potential financial monopoly onto that. And the Apple thing that you talked about actually, for me, underlines the thing, because what Apple has done is effectively a very traditional co-brand credit card, that has been done for ages, for a long time, and all they are doing is kind of partnering with a financial services institution and an incumbent scheme to introduce what effectively looks like a very much a Me Too product. So it should not put the fear on.
Can I add one line?
Yes.
So Apple has more cash on its balance sheet than it needs to buy many banks outright. So the answer to your question is, why has it not done it yet? You sort of see where they want to draw the line on that, right?
So I think we'll see everyone back here next year, and we can have the same conversation. We are over time. We have 1 minute. I just want to actually end by each of you giving one sentence. If I'm a consumer, why would I choose you?
You should choose us because we will act in your interest and make you feel good about your money.
If you don't want to think about your money, but make sure everything is always as best you can, just add everything to Curve and have one card.
Because I can look you in the eye and say, I will do well when you do well. How many others could do that?
All the benefits, trust, security, resilience of a big bank, moving at the pace of our fintech friends, and you'll get the best.
Fabulous. Thank you, panelists. Thank you, everyone, so much. Thank you all for joining us.